should a realtor know or pass along to educate their client?
Well, I think you brought up a good question when you sent questions for us to think about, is what can a realtor do because the rates have increased so much?
Yes.
How can they help people be more comfortable or be able to qualify? So there's a number of things. You could do a 2-1 buy down if it's payment comfort for people. So what that means is that, if rates are at 6.5, they're going to start at 4.5.
Okay.
And then the first year they'll pay 4.5, second year they'll pay 5.5, and then 6.5 from there going forward. And the money is just escrowed at closing. Now the trouble with it right now is the seller has to fund it. And we're having a little bit of trouble getting seller paid closing costs. But for the comfort of the buyer, they may be early in their career, daycare may be coming to an end. There may be things in their lives that are going to make that 6.5 okay in a couple of years.
Yes.
Where right now it's not.
Okay.
If it's not so much a comfort thing, like we talked a little bit about before, how people may have overtime that we can't count, that sort of thing. Well, if a year has gone by and they're still working overtime, it might be countable. So, you really have to update the whole thing if it's not a comfort thing.
Okay.
Where, maybe their credit score is better, maybe they've got more money in the bank, maybe they can get a gift, maybe they can get a cosigner. There's just a lot of things that could work even though rates have gone up.
So they need someone like you to help them through that process.
Yeah, absolutely.
What about you?
I honestly love that. 100% agree. And something else that I wish we would talk more about too is the qualifying part, right? If the interest rates is affecting us, is it because of that monthly payment changed, right? Is the debt to income a little too much? There's so many things that we could do. So for the realtor, what I would highly recommend is, let's just say it's the monthly payment, right? Or it's how much funds they need to close on the house. What I would do with a lot of my referral partners is that we roll the closing cost to the purchase price and then ask that if we do that, could the sellers essentially pay that closing cost to our buyers?
So you're kind of looking at seller contributions in the purchase contract.
Yep.
Okay.
Yep.
And the seller, they don't really care what the price is as long as the net proceeds.
If they're still getting the same net. Yep. Okay.
Yeah, exactly. So if the net's right, and that helps a lot. And as long as your buyer's okay, knowing that the monthly payment is going to change a little bit, it'll increase a little bit, right? But at the same time, their funds that they need to close has significantly came down.
Gone down. Sure.
Helps.
Okay.
And
you've sort of spread that money out over the future.
Yeah.
Okay.
And those also with MHAFAs, those MHFAs, that's still an option too.
Okay.
Right. So that's something to think about too. So you don't have to do the whole 16,500 or the whole 18,000 monthly payments, right? You can change it up where then you can do those conversations. So for realtors, appraisal gaps are coming back once again. I feel like the market, even though the interest rates have came up a little bit, we're still in a spot that in the summertime, the market's booming. So inventory comes up, we're going to be in a spot once again that people are offering. There's stories and experiences that I personally had the other weekend. We were in all tools with 100 people.
Oh boy.
Right.
Okay.
We won thanks to a fact that we were really communicative and we worked with the listing agent to make sure we could succeed. But it's with the realtor too, having to know how to make you look different than everybody else.
Sure.
And with realtors, it's having that conversation with talking to the listing agent. We have to be creative. We got to be different than everybody else and know that we're here to help our clients and we're going to do whatever it takes to help our clients.
Okay.
So
you talked about, kind of rolling that into the purchase price to help the buyer out.
Yep.
And bringing in, that kind of brings in my question on the appraisal gap. So if we're going to up it, it might not be very much, so it might not be a big issue. Got any advice for those appraisal gaps in your world?
The appraisal gap conversation, it's one of those things, because when we have that conversation of appraisal gaps, right? If your appraisal, let's just say the house is $350,000, and then we went up to about $380,000, and we had an appraisal gap there.
Yep.
That $30,000 difference that we were talking about before needs to come from us if we agreed on an appraisal gap.
Okay.
Cash.
Sure.
Right.
And so then but here's the thing, like what Cindy was saying, having people being creative, knowing that, let's say you have that asset of a car, right? And knowing that you can go against it, and the 401k. For the most part, I'm a strong believer, like when we were talking about DTI earlier, people are new, debt to income ratio, right? I don't like pushing my clients to a point where they're at that high point. To me, that's the worst spot to be in, because you're money poor. House poor is what we call it, right?
Yes.
So to be in a spot where like we're kind of in that middle part, depending on what they agree on and what works for them.
Right.
That appraisal gap conversation could probably be more of a conversation because they might have those reserved funds that we didn't want to touch.
Yeah.
You know, so once again, it comes with the double-edged sword. If you're going to do an appraisal gap, you have to remember like the stipulation of it is if that appraisal does come low, you have agreed that you're going to pay for
You're
that
going to pay
cash.
for it. Yep. Okay.